what we're doing right now is we're analyzing different sectors inside the markets, stocks and bonds, and we're identifying money managers in the world that we think can take advantage of these violent moves. And so you'll see us again rotate into things like fixed income on the investment grade side that we've been negative on, or high yield on the high yield side that we've been negative on. We may put some money into the energy space. We may get long some beta with equities with some good long short managers here because we think that value is starting to be expressed and represented. Our team has looked at the healthcare space recently. I haven't really pulled the trigger on that yet, but that's a space that we could get involved in, particularly post-crisis, as we're going to watch the development of a whole new slate of drugs and obviously the opportunity to build more hospitals in the United States. I think one of the things we've learned in the pandemic is that we're probably underserving our community by having not enough ICU, intensive care unit hospital beds, and hospital beds in general. So there's a lot of macro transformation that's going to take place in the economy post-crisis. So, the good news about our cash flows is that they are structured in a way where they're tied basically to the consumer. And as I've mentioned to many people over the last 3 or 4 years, the consumer has been in its best position that it's been in over 10 years. And so if you've got a house that's very valuable and you have a loan to value on that house of, say, 50% and you're making a ton of money, you're certainly going to pay that mortgage. You're not going to want to see that house taken from you at 50% of what it's worth, as an example. So the very, very good news for us is that we have a lot of defensive positions in our portfolio, very short-term duration, and tied to what we think is the most favorable aspect of the American economy right now, which is the American consumer. And so we're also going to go into a period here where the American consumer is likely to consume less, which means that their savings rate's going to go up, which means that their balance sheets are actually going to be stronger. So it would take a major economic crisis and a way higher bad case scenario on mortality from the coronavirus or some kind of aggressive warfare to really impair the cash flows in our overall portfolio. But having said that, we are prepared. If things are to get worse, what I consistently say to our clients is we have very short-term duration, and we have an ability to create a lot of fluid dynamics in our portfolio and to shift into things that could get short the markets or to get way, way more defensive. The legendary investor Carl Icahn has been announcing that he's getting short the commercial real estate market. Carl's position is that real estate, particularly in the dense urban centers where there's very, very high taxes to support sort of the welfare net and the goods and services that these cities need to provide to the lower and middle income people, it's creating a lot of stress in those real estate markets. And Carl himself, as an example, has moved his hedge fund down to Florida to take advantage of the lack of state income taxes in Florida and things like that. So he's taking the position that because of telecommuting, and certainly we're going to learn a lot about telecommuting through the coronavirus crisis, that real estate is a little bit more fungible and probably less valuable than we used to think of it when we all needed to be in one location together. And so the good news for SkyBridge, it really doesn't matter whether he's right or wrong about this because SkyBridge is playing mostly in the consumer sector away from the commercial real estate market. And so again, we're dealing with consumers that don't want to lose their house, so they're going to pay up on their mortgages, keep their mortgages current, keep their bank loans current, and things like that. So I don't see that as a risk to SkyBridge's portfolio, and we're really not involved in that space to any large extent.
All investments are subject to risk, including the possible loss of the money you invest. For more information about SkyBridge Multi-Advisor Hedge Fund Portfolios Series G and the SkyBridge G2 Fund, call 1-888-759-2730 to obtain a prospectus. Investment objectives, risks, charges, expenses, and other important information about a fund are contained in the prospectus. Read and consider it carefully before investing. This webcast is for educational purposes only. We recommend that you consult a professional advisor about your individual situation.